Can I just get your initial reaction to these earnings, of course, following on from Tencent, which we got earlier today as well?
Yeah, I'd say my one-word takeaway is affirmation. We've been noting accelerating trends in the Chinese consumption environment. Alibaba's position is very strong, obviously, as you noted, and they've been seeing some very notable monetization improvements. So combined with good volume growth and strong operating environment and a high-margin business model, the product of those is the results that we saw today. So affirmation is my initial takeaway.
Yeah, what about the cloud computing? Because that dipped below triple-digit growth for the first time in several quarters. Is that a concern to you?
Yep. No, it's not. They're in a market development phase, and I think the offset here is the number of paying customer additions at over 280,000 was by far a record, the previous high bar being 130,000. So their primary objective at this point is to win the land grab, and they're doing that. They have had some aggressive pricing actions over the past couple of quarters. That deflates the top line growth, but I think as long as they're successful in getting the early adopters on their cloud en masse, they're positioned to win this market.
One area it's not doing so well in is entertainment, in fact, in spite of spending a lot of money and promising to spend more on entertainment. Why is it not performing as well here? Can it fix that? Yeah.
Well, they've made a couple of big acquisitions in the space. This is not it's a tangent to their media or their commerce properties. And when they acquired Youku Tudou last year, they took that business and really started to break it down and reform it and integrate it thoroughly throughout the Alibaba ecosystem. So it's a work in progress, and they've been very clear to position the turnaround time as or the fully integration time as a matter of years, not quarters or months. So they're doing what they think they need to do in terms of growing audience. The advertising revenues really decelerated because they've defocused that part of the business, and they take long-term view on the investments that they make. And I think no exception in the media space. So time will tell, whether they can be successful in the wide-open digital media field in China.
Well, and it's fascinating. It's also putting money into brick and mortar stores, sort of going in the opposite direction. It's recognizing, like even the big e-tailers in the States, that you have to have some kind of brick and mortar presence, because still, even in China, more than 80% of purchases are done by hand.
Yeah, I would say that unlike the Amazon acquisition of Whole Foods, for instance, this is less about an infrastructure investment. Like Amazon is clearly, I think, interested in Whole Foods for its space and in affluent markets and for the extension of their logistics infrastructure. Alibaba's model is very different. They're not a first-party seller. I think their acquisition of In-Time Retail, which is, I think, what you're referring to, this is more of a large-scale experiment to understand how they can extend their value to the brick-and-mortar retailers. I don't envision them making a big asset play or further asset plays, but I think in order to really understand the complexity of the hybrid model offline to online, owning it is probably a more strategic position to really fully learn how to do it properly.